we will go silent. So that's not hanging out there.
Okay. I guess it tells me, let's see, are we streaming live now?
We are now live.
Okay.
And we will wait just a few minutes and we'll start it exactly at noon.
Okay. I've actually, I've used Zoom functionality a lot before, but not the Facebook Live functionality. Are you able to see the attendees as well?
Yeah, actually, we can. Uriel can see it. Yeah. So we are currently live, waiting for people to show up, and we'll start in just 3 minutes. We'll get started in just 1 minute here. All right. Well, we're going to go ahead and get started. My name is Jerry Frank, and I'm co-founder and CEO of STRATAFOLIO. We're a web-based software solution designed to help commercial real estate companies with 4 pillars that are critical to successful management of a real estate business. And those are financial management, asset management, lease management or operations management, and investor management. And today's topic is about the importance of managing common area maintenance expenses. It's an activity that a lot of teams grapple with. And with us today to talk about that is Kyle Cass from Honkant Kruger. And Kyle is a CPA and a partner there. And prior to joining Honkant Kruger, he spent 10 years in the audit department of a Big 4 firm. So he specializes in the adoption of accounting standards and assisting clients with GAAP compliance. Welcome, Kyle.
Good afternoon.
Yeah. So the format for today will be like we always do. It's approximately 20 minutes of discussion, followed by 10 minutes of Q&A from the audience. But please feel free to chime in if you have questions, and we will try to pull those in as it relates to the current discussion. So we are going to begin with the first question of what are some of the key considerations from around CAM when you're getting started? And maybe we'll just start with what is CAM? We'll start there and then we'll build into this next question. Yeah, so you want to talk about what is CAM from your perspective, Kyle?
Oh, so yeah, so common area maintenance, also known as CAM, is typical charges that you see in a rental agreement that cover kind of shared costs of the property. So when you think about being a tenant in a commercial property, a lot of times there's costs tied to that, like snow removal, landscaping, janitorial services, a number of the common shared services that are necessary to maintain a rental property. So that's what's known as CAM, or common area maintenance costs.
Now, if we dig in a little further and we think about some of the key considerations that owners or managers or landlords have to deal with around this, let's go into some of the things that you encounter.
Yeah, so when you think about contractual agreements for CAM, you really have to be thoughtful in thinking about what's the inventory of those common area maintenance charges. So, thinking about your property, some of the examples I listed, are those really relevant to your property? And then making sure when you're building out your CAM charges, your CAM agreement with your customer, making sure you're explicit in the agreement. So it's one thing to say in your agreement with the customer that you'll have common area maintenance charges that are billed out. That's very different than saying, well, common area maintenance, and that's inclusive of janitorial services, landscaping, snow removal. So making sure you're explicit, so there's transparency with the tenant is very important to get those charges agreed to. The other thing that's important to think about from a CAM perspective when you're thinking about contractual agreements with the tenant is really thinking about what's your total cost structure for those common area maintenance items, and thinking about if you should build in a fixed amount per month into the contract itself. So having a high level feeling or overview of what those total costs are helps you to build out a fixed billing amount per month. And then you can build in what's known as a CAM reconciliation, or a common area maintenance reconciliation, into the contractual agreement, which really takes you and bridges that gap between the fixed amount that you contractually bill per month back to the actual costs incurred. That's really what helps make you whole as a landlord or as a lessor, to make sure that if the actual costs incurred are something greater than what you've built in from a fixed fee per month perspective, that year end, or whatever frequency you choose, typically you see it once annual, that reconciliation of actual charges to build per month, making sure it's contractually explicit in the agreement, gives you that opportunity to go back to the tenant and make sure that you're truing up to the actual costs that have been incurred. Right.
And really, when you think about it, the goal for both parties is to be at zero at the end of the year. That you as the landlord are not holding costs for a longer period of time, and the tenant isn't having to come up with an additional charges or cover those additional charges at the end of the year. Zero is perfect.
Exactly. Yep.
Where have you seen, I know you mentioned being very explicit in what is covered and what's not covered. Do you have examples in the past where things have been a little murky and it's made reconciliation difficult?
Yeah, so I think, the example I mentioned where, if your contractual agreement, says, well, common area maintenance will be, build out, and there'll be a CAM reconciliation at the end of the year, where you get into some, I guess, discussion or debate potentially with your tenants is, well, what does that mean? And you get to the back end and you could have some disputes on, well, I didn't understand that was part of what you would define as common area maintenance. So I think that's where you get back to, the level of granularity in the contract and the contractual language itself can be beneficial to make sure that, there's no gray areas, I guess, amongst the two parties. And they know the responsibilities that will be covered by common area maintenance.
Okay. What kind of guidance do you have in terms of what should be shared with the tenants at the end of the year, end of the quarter, however you have elected to do your reconciliation? What do you recommend tenants see?
Yeah, I think, what I'd recommend in many instances, landlords or lessors themselves are managing a property with multiple tenants. And so you think about kind of repeatable process, you think about ease of producing the information and providing that out to the tenants. I think what I've seen as a best practice is having kind of a standard format statement that you would use, that you would show, again, probably being explicit again, common area maintenance charge, kind of line by line. So if you had, janitorial services, landscaping, snow removal, and showing kind of the annual billed amounts, the actual charges, and then showing kind of a delta between actual and estimated, and using that in kind of a standard use format that gets provided to each of the tenants, I think is a best practice, again, because it's a highly repeatable process, highly standard format, so you're not creating unique deviations for one customer here, one customer there. And I think, along with the record keeping, good supporting documentation, retention is important. I don't think you need to be providing that, directly to the tenants, unless it's a separate explicit request. So I think a standard use template is what I've seen kind of as best practice in that area.
Yeah. And actually, this is where I would say for Stratafolio, this is something we have. So at the end of the year or quarterly, if you need it, you can produce a CAM reconciliation report in the standard format across all of your tenants in just minutes. What have you seen that owners have done that's problematic around CAM? I'm sure you have lots of stories, but maybe if we could just go down to the most common things that you've seen that people should be aware of so that they don't continue on or stop those practices.
Yeah. So I think, when you think about problematic things that I've seen, some of it goes back to the contractual agreement itself. So, the lack of being explicit on, what's covered by common area maintenance definitely is one issue. So making sure that you're being thoughtful, getting legal involved if necessary as part of your upfront contractual agreements, making sure it's all inclusive and it's transparent, it's clear to the tenants. I think a couple of other things that that can be problematic relate to just internal processes and kind of efficiency or inefficiency from that matter. When you think about, your ability to track those common area maintenance charges, the ability to, track that timely. So some of it even goes back to, when you're thinking about billing out common area maintenance and tracking that actual cost, going back to your general ledger or accounting structure setup, and if you have 4 charges that you're going to bill out to your tenants, do you have explicit separate reporting for those 4 charges that you regularly maintain, regularly update through your accounting system, and have real-time data available? You'd be surprised by the number of instances where that data is not maintained in a standard format, or not well organized. And then you get to the back end of the year, and that process in and of itself becomes a much more burdensome, difficult task than it would be or should be if you had been, keeping granular, detailed records along the way.
Really, what you're suggesting is not intermingling company overhead expenses with coverable expenses.
Correct. Yep, exactly.
Yeah, we actually put together a best practice chart of accounts that clearly delineates those things, because we were seeing so many times where people were intermingling those expenses, and that makes it hard for bookkeepers, it makes it hard for training, it makes it hard for reconciliation. So yes, we've seen that. In terms of leases that have caps or floors, what guidance do you have for owners when that comes up in leases? And I realize this is more frequently happening in leases where it's a big box store, someone with a corporate presence.
Yeah, and so I think occasionally you'll see the idea of a cap or a floor built into a lease agreement for these common area maintenance charges. Some of it goes back to negotiating power a little bit to some degree. In most instances, the idea of executing an agreement with a tenant involves some level of negotiation. Now, whether that's a negotiation on the rental charge itself, or the push through or pass through of common area maintenance charges, usually there's some level of agreement there, or negotiation that results in an ultimate agreement. And so when you think about kind of building in a floor for common area maintenance, you might find that strategically, certain owners will build in a floor, maybe that's above their direct incurred costs, but that's part of the overall negotiation of, if a tenant's got in their mind they can't go above X amount for a rental fee, and they're not thinking all inclusively enough about the total cost of rental. Sometimes that floor, if you're diligent as an owner, getting bids, getting price quotes from different vendors, really managing and controlling your common area maintenance costs. Mm-hmm. Sometimes that floor can result in, in a recoup of some level of margin. And that takes into effect that there's more than just a direct cost, right, of managing common area maintenance. There's people costs related to the record keeping, there's vendor supplier management. And so that floor can sometimes be a strategic way to get a little bit more overall total dollars as part of the rental agreement. If you're really strategic to be selective in your suppliers, your vendors, and really manage or maintain your underlying common area maintenance costs. Alternatively, when you think about a cap on common area maintenance, from a tenant's perspective, sometimes there's some comfort in knowing that your all-in costs for rental plus common area maintenance plus other associated costs. Sometimes there's comfort in knowing what that max is going to be. And so from that perspective, you might see a tenant push for a cap on common area maintenance in the agreement. And I'd say, that obviously poses a little bit more risk for an owner, especially if you don't have, a great feel of what those actual costs are going to be. Worst case scenario, we live in the Midwest, and let's say one of those common area maintenance charges is snow removal, and you've got a guy in the parking lot, clearing snow 3 days a week for 3 months, right? And that, it's an unusual winter. When you build in a cap like that, there's obviously some risk to the owner that you could end up, bearing some of the burden of some of that cost. So I think you got to be careful with the caps from an owner's perspective sometime, just to make sure that if you are building in that cap, you feel good about the rental charge itself, and you feel good about your cost structure.
Yeah, and in that situation, it becomes really important to monitor those ongoing costs to see, if for instance, you had a cap on landscaping and it was $20,000 and you're in October and you've spent 10,000, well, maybe you want to think about spending the rest of that up to that 20,000 and finishing some landscaping projects. There's some things to think about with that side.
Yeah, yeah. So the caps and the floors get to be, when you get into more of a negotiation, those can come into play a little bit more. So something just to be cognizant of through the negotiation perspective.
Right. So if you're an owner and you're buying a new building that already has CAM in place, what do you recommend that the new owner get from the previous owner around that building associated with CAM?
Yeah, so if you're buying a building and you're inheriting, some existing, contracts, obviously it's important to obtain those contracts themselves and understand, holistically what's included in those common area maintenance charges. I think it's also important to ask for historical information from the previous owner, give you a better feel of what the detail of the charges have been, the historical actual costs that have been incurred for those types of charges. And then another thing to think about is, just getting an inventory, and this should come from the statement of charges itself, but making sure you get an inventory of who the existing, service providers are, and get the perspectives of the previous owner if those service providers are, providing good service and providing good service at a good value, or if there's some opportunity to go out and, look at alternative vendors or service providers. So I think, really understanding the contracts that are in place, really getting a feel for what those historical charges have been, and then, it's a good time to do some benchmarking again of, are you using the right providers for the property?
On the converse, then, if you're buying a new if you've built a new building and there are no historical CAMs to start with, what do you recommend so that you're not wildly off one way or the other?
Yeah, I mean, that gets to be, year one there can definitely be tough. I think, again, we think about, changing ownership of a building, good time to kind of benchmark, different suppliers and vendors. Obviously, if you're starting from scratch, might be a good point to see who some of the providers are in the marketplace, or if you have existing properties and you're adding another property into the portfolio, maybe there's an opportunity to negotiate with your current vendors or suppliers for some better pricing, some volume related discounts potentially.
Yeah.
There's a little bit of an unknown with completely brand new property. One thing you can always do your best from an estimation perspective, but that becomes a little bit difficult. So one thing that I've seen some owners do, particularly in year one, is maybe consider doing a more frequent CAM reconciliation. So, use a best estimate as far as negotiations with the tenant and saying, all right, well, I'm going to bill you X amount per month for common area maintenance. Be explicit in the agreement that there's going to be a CAM reconciliation. So ultimately the goal is to true up to actual costs incurred. But doing those reconciliations more frequently, might get you to a point where you become aware that the fixed charge that you're billing per month is too little, or too much. Too little, you obviously can run into some cash flow issues. If you build in a fixed fee that's too low and you're not doing a CAM reconciliation until 12 months down the road, from a cash flow perspective, you're basically giving the tenant the benefit of extra cash in their pocket, as opposed to a better fixed fee that's billed throughout. So you could consider updating the frequency of the CAM reconciliation to be more frequent, and being transparent with the tenant that that the fixed fee per month is subject to adjustment
right
after each quarterly reconciliation.
Yeah, I think that's a great suggestion. I know you had a couple of things that you also wanted to talk about that have to do with lease accounting standards and some changes that are coming up. You want to take us through that?
Yeah, hopefully I can keep everybody awake for this one. So some of you may have heard, some of you may not have heard, but it's been on the horizon for a number of years now. There's new accounting guidance that's being issued for lease accounting. It was issued for public companies a number of years ago, and they've had to adopt the new accounting guidance and use it in their internal accounting processes. But private companies have luckily had a number of deferrals of when the effective date of this new accounting guidance came into play. Most recently, it was supposed to be effective in 2021 for private entities, but with COVID impacts a year ago, the standard setter stepped back and said, wait a minute, owners got much more important things to take care of than trying to deal with the burden of a new accounting standard. So the new accounting guidance will be effective actually for the year ended December 31st, 2022 for most companies. And really what that new accounting standard, that new accounting guidance is trying to do is make financial statements more comparable amongst entities. So today, and it's significantly more impactful to lessees or tenants than it would be to landlords or lessors, but still somewhat impactful to both. So in the current state today, if a lessee has an operating lease, they currently are not putting any sort of liability on their balance sheet, and no sort of asset on the balance sheet to reflect kind of that future payment obligation under the operating lease itself. And so what this new guidance is doing is it's taking all those operating leases that are currently kind of off balance sheet or off financial statements, and it's bringing those all, I guess, on balance sheet. So today, if you had a finance lease, you would have a liability that's present on your balance sheet for the future anticipated payments under the lease. 2022 operating leases will also be on balance sheet, showing kind of an obligation you have for future lease payments. So that's fundamentally the biggest change, and what it's really trying to do is reflect kind of all future payment streams tied to leases, put a liability out there on the balance sheet. And so I think when you think about, continuing, I guess, on the topic of common area maintenance and, this accounting guidance, currently today, if a lease agreement has common area maintenance included in it, it does not, the individual lessee will include those common area maintenance payments in their obligation that goes in their footnotes on their financial statements. But come to the new standard, they'll be required to then understand how much is pure rental, how much is common area maintenance, and that common area maintenance will not be included in how they calculate their liability on their balance sheet. So when you think about that from a lessor perspective, knowing that your lessees need to understand kind of that split of what's the relative market value of each of those things, they may come back to you with more questions to say, is it really clear how much of this of my total rental fee, for example, is base rent itself versus common area maintenance? Because they need to do analysis to say, is the contractual price reflective of the real market price? So it gets to be a little bit more effort for the lessees and the tenants to really understand, is that common area maintenance charge, is it really contractually at a market rate, because that directly impacts their accounting and what they'll record as an ultimate liability.
Okay, yeah, that makes sense. Yeah, I'm sure this is a big topic that'll probably come up really late in the year next year. Anything else around that new agreement or new accounting regulations that are going into effect that you want to cover?
Yeah, I mean, I think we try to highlight, a couple of areas that will be a little bit more impactful to lessors. Under the current accounting guidance, basically, there's an option for the owner to not separately consider land separately from a building itself, as far as determining how the lease should be recorded and classified on their financial statements. With the change in accounting guidance, basically the ability to do a combined assessment across those two items kind of goes away. And the land on which the property resides, as well as the property itself, need to be separately evaluated from a lease classification perspective. Mm. And there's lots of little nuances that we could probably spend all kinds of time talking about there, but that's one of the high level changes, and probably the most significantly impactful to lessors. There are some good resources out there. So if anybody in the group or on the meeting wants me to send along a few resources, I'd be happy to share that and continue the discussion.
Okay. One question that I got privately as a question was, is there anything the landlord should be doing from an invoice perspective to help the leasee for their reporting purposes? So when they're sending out that invoice right now, typically it'll say, base rent or rent, and it may indicate that there is some operational cost recovery. Is that sufficient to help that leasee for what they need to have in order to close their books?
Yeah, I think that's helpful. I think that base fee separate from the incremental recoverable costs or common area maintenance costs, I think it's going to be helpful for the lessee. Mm-hmm. Now the lessee, you think about, I guess, the new standard coming next year, the lessee still has the obligation to step back and say, is that price for rent separately from common area maintenance, do they represent kind of a market rate, which is an evaluation the lessee will need to do. But even having that level of information or granularity, right, is helpful from the lessee, as opposed to a scenario where the agreement itself has one fixed fee that's all inclusive of the rental cost itself plus common area maintenance, and it's kind of just buried into one kind of fixed charge. Mm. So at least some starting point, an additional level of granularity would be helpful to the tenant or the lessee.
So that's more of a case of a gross lease where they're all in. They're paying their rent and the baked in.
Yeah.
So in that case, anyone who is operating under a gross lease and really is still taking in using those facilities as in a common area way, now those landlords may need to give a more granular invoice out.
Yeah, it would be an accommodation probably to the tenants, so the tenants or the lessees. I think the accounting guidance I talked about is impactful to lessees or tenants that are preparing US GAAP or generally accepted accounting principles financial statements. Yeah. If your client is doing some cash basis of accounting or tax basis of accounting that's different from kind of US GAAP, they won't have the same level of, I guess, requirements. So you might have across the portfolio of tenants, you might have some that this new guidance is impactful to, and some that it's not. But yeah. I think having more granularity would be probably helpful for them. If you don't build that in from a landlord or an owner perspective, you just might have follow-up questions from your tenants, or they might ask for some incremental information.
Mm-hmm. Okay. Let me see if I have any other questions here. One question we have is curious how you recommend handling CAM if your vacant space varies. Do you have any recommendations around that?
Yeah, so I think It's a good question. Yeah, I think that's where you can contractually consider whether or not it's, your CAM allocation is based upon, occupied space. So percentage of space utilized relative to total occupied space, and billing it out that way versus, percentage of utilized space by a particular tenant relative to, kind of total overall space for the property. So it goes back a little bit to, the negotiation stages of the agreement, and the ability to, I don't know if you want to call it be more aggressive, but if you contractually structure it where it's utilized space by that particular tenant relative to total utilized space in the property, that gives you an ability to bill out, your full common area maintenance charges. But some of that might go back to the negotiation stages with the tenant themselves.
Yeah. So if the lease is silent on this, should tenants expect higher CAM when there are higher vacancies?
If your lease is silent on it, that's a good question. That might be one where I would defer to my legal friends across the street. That is a good question. But I think it's probably more one of a legal perspective or a legal opinion.
Yeah. Well, I guess that definitely would make the tenants in the building help find other individuals to fill the space. All right, I think that really takes care of all of the questions that we've had. I'm going to put up a screen here as we close. But if you want to reach either Kyle or myself, our contact information is on the screen. And please feel free to reach out to Kyle. He's at Concamp Kruger. He's actually located in the Dubuque area, but there is his email and phone number. If you are interested in working with STRATAFOLIO, we do a lot to help simplify the world of CAM reconciliation. It's really quite a sight to see. So if you want to talk to me about how we could potentially help you with your CAM reconciliation, my contact information is there. Thank you everyone for joining. As always, we're looking forward to departing more information that helps you run your business more profitably. Take care.
Thank you. Have a good afternoon.